Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm joined now by Steve Sjuggerud, the editor of True Wealth Opportunities and Daily Wealth, and so many other publications in the Stansberry universe of publications. Today, I want to talk to you, Steve, about what you've been working on in terms of a new strategy to invest in real estate. We know that we're in a period of time when the Fed is pledging to keep interest rates low for at least the next 2 years. It's going to be a lot tougher to find a place to make a good return. You say real estate is something we should take a close look at. Why is that?
Yeah, absolutely. There are so many reasons, and I think that you actually hit on one of the most important ones, is that the Fed is keeping rates low, and basically that's driven mortgage rates to extremely low levels. As mortgage rates fall dramatically, as they have, the amount of a home that someone can afford rises dramatically because everyone buys a house essentially based on the monthly payment, not based on the ticket, the sticker price, so to speak.
Mm-hmm.
So as mortgage rates have fallen dramatically, the amount of house that you can buy has gone up dramatically. Jessica, what do you earn on your money in the bank right now? Like what percent on your savings account?
1%, something like that. Yeah, it's
Yeah,
not even
it's
keeping
not.
up with inflation.
Yeah, it's not you. It's not your fault. Everybody is earning essentially 0 point something. And it's terrible, right? And you're earning zero because the Fed has set rates at zero, so the banks have to only pay you zero. And then bonds are incredibly low. Like, as an investor looking for income, income is very hard to come by. You look at any income vehicle at all except for rent. I just visited a property with an office building with my colleague Brett Eversole for part of our new product, and it's essentially paying out rent after expenses of 7%. So that's a
Got my
7%
attention.
yield.
Yeah.
And so in a 0% world, to earn rent after expenses of 7% is pretty incredible. And I'm not saying this is available to everyone everywhere at all times, but my point is that even if the value of that building doubled, I'm saying that prices in real estate can go up, if the value of that building doubled, your net rent after expenses would still be 3.5%, which isn't too exciting, but it's a lot better than anything else you can find out there. So I like real estate because not only can you earn the high yields that you can't get anywhere else, but you'll also get the appreciation of that building.
You know, we've talked about the pandemic so much in so many of my segments. It is affecting every asset class and every investment strategy. And one thing we've talked about specifically is that we're working from home. So commercial real estate has less value. There's less commercial real estate that we'll probably even see on the market. The Trump administration is already talking about maybe turning some of these commercial spots into actually housing because they don't know what else to do with them. So I would put that question to you. How does the pandemic and its impact on commercial space impact how you envision investing in real estate?
No, it's absolutely a great question. You know, we see all kinds of retailers that had to shut their doors, right? And hotels, no customers, and many people working at home, as you mentioned. And maybe companies realize we don't need all these people in the office anymore. But you're not thinking about the other side of it, which is all of this social distancing and such. Like right now for our company, Stansberry in Baltimore, everybody's in a wide open room. And going forward, that type of working environment may change, and you may get more space per employee.
Am I getting an office? Is that what
Yeah,
you're
you're getting an office, yeah. And ultimately, you will need more square footage per employee. That's just a basic way of thinking of it. And so I realized that we're thinking, oh, well, gee, fewer people are going to be in the office going forward. And so that's really going to hurt office buildings. But I'm focusing on the sort of Class A type office buildings, which means the very best high rise, the newest, tallest, most modern high rise in your town. And those are filled up with lawyers' offices that aren't going anywhere. And if they need to add more space per employee, that's demand for more office space in that building, not less.
What's interesting to me is that there are a lot more ways that you have become aware of than I know about how to get into real estate. Maybe you could talk about how that is part of the product idea that you have, because I just didn't even know how many different ways you can say I'm investing in real estate.
Yeah, I mean, there are incredible ways, and some of them have only just become available to us as investors in the last couple of years. I mean, they are brand new ways to invest in real estate, and there's usually not a whole lot new in real estate. So to have a brand new way for people to invest, and as a simple example, most people don't have $100 million sitting around to buy an office building, you know? But there was no way for you and me and our friends to pool together that money and invest in that building very easily. If you almost think about like GoFundMe, for example, where someone's, you know, raising money for a cause or whatever it is, and you put your money in and everybody else puts their money in, and hopefully they raise the money for the cause. So now there are ways to sort of GoFundMe and buy that $100 million office building, for example. And except you don't actually use GoFundMe, okay? There are, you know, it's called crowdfunding, and instead of GoFundMe, the deals are vetted and to varying degrees depending on which crowdfunding source there is. But I think sort of government regulators have made it easier for individual investors like, you know, you and me to, you know, pool. Usually there's the minimums are kind of high on these types of things, like $25,000 and up. But at least it's a way for you and me to own that stake in that $100 million building and earn that much higher rent that building would pay.
And you feel comfortable about the amount of risk that represents to investors?
There will be hundreds of these crowdfunded deals, and some will be very good and some will be very bad. Some will go belly up. So what I'm doing in my research service is I'm actually looking at the crowdfunding deals, doing my own due diligence with my team here and finding the best ones and sharing those with my readers.
Listen, thanks so much for joining us, Steve Sjuggerud there. And if you would like to see much more content just like this, please do subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for watching.